Hey, everyone out there. Welcome back to another edition of Credit Conversations. My name is Hailey Rainey, and this is where we talk about all things credit. I know you guys have a lot of questions about credit. I know we have a lot of issues with credit, and I like to cover those things here in these webinars. Oftentimes I'm talking about personal credit, and this is for folks who are looking to fix their own credit, and so that they can buy a house, so that they can buy a car, or they just want to be able to position themselves for better things. Because, of course, as I've always said, better credit leads to a better life. And what I mean by life, I'm just saying in terms of the material side of things. It's not philosophical or anything like that, but it's strictly from a point of having empowerment in the marketplace when it comes to buying, to purchasing those things so that we can live, a quality life. Now, in addition to having good credit, one of the benefits of having good credit is, in addition to being able to purchase things, it also gives you the power to go ahead and use credit to benefit things in your life, things such as by starting a business, buying assets, because that's the biggest thing with credit. You don't want to use credit to buy assets so that you can increase your wealth. So sure, it's important to buy a house. That's a great asset, but you want to be able to buy income producing assets. Sure, it's great you want to buy a car, but if I can show you a better way to use your credit to buy assets, and then those assets can buy the car instead of you financing the car on your own, there's ways of doing that. And if you want to use credit along with your cash to leverage your cash to start a business or buy a business and then go into business for yourself, you can, that business can become an asset also that produces income to help you make money. And hopefully you make money, you build and save your money, and you use that money to invest and grow more money. And the idea there is that you increase your wealth. Everybody is interested in wealth these days and riches, and credit is a big part of that. So credit is a lever. It's like leverage. We talk about leverage, where if you got a business and you're looking to start a business where you can earn income, you use credit to fund your business. And particularly in business, you want to use business funding in order to do that. Now, keep in mind that you got to have great personal credit in order to leverage that into building business credit. And then you need business credit to use that to fund your business. I know there's a lot of folks out there on the internet that'll tell you you can develop business funding without personal credit. I'm not going to debate about whether that is true or not, but I will tell you this. It is very difficult to build business credit without good personal credit. If not impossible, it is extremely difficult. So today I'm going to talk a little bit about business credit, but I'm going to talk specifically about business credit tiers and how you can the tiers and how you go about starting to build business credit once you've built a business entity. Obviously, you want to structure your business so that you can earn credit. And I'll talk about that in another video. But this one is, I'm going to discuss with you how to understanding the path to building business credit. So what exactly are the business credit tiers? The business credit tiers, they represent a group going from bottom to top, a structured path for businesses to build and expand their credit worthiness. So we're talking business credit here, not personal credit, but their personal credit does have a part to play in this. But this is about business credit only. So for you guys out there who are looking and interested in business credit, I'm talking about this, and this is for you today. you want to start with vendor credit and then grow into accessing large lines of credit, business loans, and even more business lines of credit. So what's so important about the tiers? Each tier sets a specific benchmark of trade lines. And trade lines are basically what we call accounts, the different accounts that are on your credit. So those tiers have benchmarks, and think of them almost as levels. And so for your trade lines, your credit score, and your payment history, the higher you progress up these tiers, the more financing options will become available to you. And so as you try to move between tiers, you need a combination of strong payment history, the right number of reporting trade lines and credit scores like Paydex and Telescore to move you from one tier to the next. Also, Experian and Equifax have business credit score models as well. And so those play an important part, in your credit scoring model. So think about it for a minute, okay? Even if you were starting your business and you were looking to grow your business, first of all, you typically don't want to use your personal income, your personal cash to fund your business. Now, I know there's been many of you out there that have started a business. Great for you. And you've used your own personal money to start the business and invest in the business. And that's great. But I would advise you, in order for you, so that you can separate things. There's a way, if you've structured your business, if you created your LLC and your EIN, you've opened up your bank account, and now you're starting to try to get, what you want to do is you want to try to not use your personal credit to fund the business, because typically when you have to use as much credit as you have to fund the business, you run into problems with things like credit utilization ratios on your personal credit, on your revolving accounts. And then if you take out any business loans in your name and not in the business, you're personally liable for that. But by creating credit in the business name, only the business is liable for it. And so you don't risk losing your house if you have one, or any other monies that you have in funding the business and growing it. And you can, if your credit is excellent now, you can start to rely on business credit so that you don't overtax your personal credit. If your personal credit is not great, you got time to work on it while you're developing your business credit also. So just to give you a quick story, I had a gentleman who was looking, he has a landscaping company, and he's looking to expand on that. Now, he started out with him doing all the work. He built a clientele, a business, one truck of his own, and he developed a nice book of business. He then decided he wanted to expand, because as he was getting more and more clients, he's getting more work than he can handle. So he brought on a second guy. So he started working as a two-man crew so that he could get more jobs done per day. But his ultimate goal was to get a second truck, and they have a second guy so they can split the clientele list in half, or at least in two parts, and then they both can work on the clientele list and get more done, and then have room for that. But he was looking to buy another truck and be able to develop a payroll. And so what he needed to do was work on his personal credit to get him in a position. But before we did that, I worked with him to make sure that he created an LLC. He then got an EIN. He opened a bank account, a business bank account. And so he started, because he was receiving the money primarily through like Zelle and Cash App. And so we had to set him up with a credit card processor, so he could still take Zelle, he could still take Cash App, and he can still take cash, of course. But then this way, we started funneling the money into his business bank account. So now he can track and show his business revenue. He kept track of it on paper, but now we can show it going in to a dedicated bank account. We can see the money coming in. And now since second quarter of this year, he can now track his revenue going directly into his account. And then he started with the bank account. He started with Bank of America. And then from there, he started to establish a relationship with Bank of America, and with the hopes of getting a credit card from them to establish a business relationship and get funding from them. So eventually what he has done thus far is he has developed a relationship with Bank of America. He got his banking with them, and now he got a credit card with them, and he's looking in 4 or 5 months to get a line of credit for him. And then what he's looking to do is finance the purchase of a second vehicle. And then we're going to look at developing, he's going to work through the rest of this season, this summer, developing that. And then with the plan of, because he normally switches to snow removal in the winter, and with a couple of other business ventures he has as well. But the idea is we're gearing up so that before next spring, he can develop a second crew, and then he can purchase a vehicle and the equipment he needs to equip a second truck with a riding lawnmower and so much. So now he can expand and have 2 crews. And then initially he's going to have 2 one-man crews. Then he's going to move to have 2 two-man crews. And we have a plan to elevate him up. But if he was to do that without funding, he would have to continue to stack and grow his revenue and then use that for money. But you want to grow your revenue, and then you want to use your credit. First of all, you got a level of credit for day-to-day operations. Then you're developing more credit for future growth. And that's sort of what he's doing in that case. He's developing growth because his growth plan now is to continue to get more customers, but he's trying to service the customers he has with the crew that he has. And then so he's making plans so that as long as he has the demand, it makes business sense for him to prepare for that next level of demand with his current capacity. And so can grow in that. And then there's a little bit of training involved. But again, my point is he's getting the credit so that he can leverage this growth and do it quickly and do it in the spring instead of doing it 2 years from now where he's trying to build up the money to do it. He's going to use credit to leverage his current revenue, which is pretty good. He's doing about $9,500 a month. That's based on the book of business he has. And then we're working on some things to try to see if we can grow that further. So that's the point of using the credit, because that way you can leverage your growth to do things in the next quarter, in the next half a year, rather than 2 years from now, 3 years from now. Your 5-year plan, instead of doing 5-year plans, we're doing 90-day plans for growth. And so the developing credit and leveraging and building your funding capacity is part of those 90-day plans. So just like, and again, he's in landscaping, so he has need for equipment and materials and supplies and things like that. So when I'm talking about credit tiers, there are a lot of vendors in the credit tiers that supply these type of things, so it works perfectly for this business. Now, you may have a business where you don't need mechanical things or maintenance things like that, but there are other credit vendors that fit just about any business model. So you want to build your credit in tiers. So each tier builds from the previous one. So it's a buildup. You can't just go right to getting a loan from Chase or Bank of America or whatever. You develop a relationship first. But again, you build the credit in tiers. Each tier builds on the previous one, starting with vendor credit in tier 1 and progressing all the way through to tier 4, which includes high limit cash credit, where you can get loans where they give you actual money. You want to maintain a strong Paydex score, and I'll go more into what Paydex is. But essentially, you want a Paydex score of 80 or above before you can try to move up to the next tier and accessing better finance options. And then I'll show you how vendors that you want to prioritize, because you want to focus on vendors that report to multiple bureaus. And these are vendors like Uline, Granger, Bluevine, and others to maximize your credit building potential. Now, the next steps, you want to continue to build your credit by expanding your number of trade lines and maintaining timely payments to reach all the way to the top tier, which is tier 4. So let's talk about tier 1. And I'm going to go through these quickly. And if you guys want more information about those, we'll talk about them in more depth in other videos, but you can always reach out to me and I can go through these more for you. But no gatekeeping here. I'm giving you all the goodness. So tier 1, vendor credit and transition to tier 2. So first of all, I'm going to show you about building that foundation. So first of all, the requirements for tier 1. Your business must be at least 30 to 90 days old, right? So you've set it up, 30 to 90 days old. You've got your LLC, you've got your EIN, you've got your DUNS number. That's your Dun & Bradstreet number. That's part of the credit rating service. If you don't know anything about that, you can check it out, but I'll be talking about that in detail in another video as well. Now, there's no minimum business credit score needed for that. So what you're seeking here is building trade lines and credit limits. You want to start with vendor credit, and then you want to have with no minimum number of accounts required. And your credit limits will start as low as like $500. Okay. So what vendors do you want to start with tier 1? You want to go with Uline, Granger, Quill, Crown Office Supplies. Now, the beauty of these vendors is they all supply office supplies. Granger even offers mechanical equipment and tools, things like that. So again, with my landscaper client, Granger comes in handy for him. Crown Office Supplies, similar to Office Depot and things like that. They provide all of that. Now, the beauty of them is no personal credit checks are needed. So this is something you can do. Again, tier 1 is what they talk about when you see on the internet where they say, oh, you can build business credit with no personal credit, even with bad personal credit. That's only at tier 1. That's primarily at tier 1. So yes, what they're saying is true, but it's in a limited fashion. So yes, you can start to build your business credit even when your personal credit is poor, but you're only going to get so far with that. Business credit is not a workaround for poor personal credit. So you still need to get your personal credit as best as you can, but you don't have to wait till your personal credit is perfect or high before you start building the business credit. These two things, you can work on both of these at the same time. So you don't have to wait for one. At tier 1, you can work on your personal credit while you work on your tier 1 credit rating. And so then that way you're working on it in preparation to go to tier 2. And so hopefully by the time you've gotten your personal credit in order, your business credit at tier 1, you've done all your tier 1 things and you're ready to move to tier 2, you've gotten some progress in fixing your personal credit as well. And so And so that, keep that in mind. Keep that in mind. So when you're trying to get to tier 2, keep in mind, by the time you're done with tier 1, you should have a minimum of 3 trade lines and to report before you can even think about trying to advance to tier 2. So remember, we've done this thing. We're gone after Uline, Granger, Quill, and those others, and you want to have it where you've developed, you've got a relationship, you open up an account with them, and you got 3 trade lines that are reporting and got those in order with a good rating, and before you can think about going to tier 2. So let's talk about Uline, because I'm going to talk about these a little bit in advance, a little bit at a time. So Uline, office supplies. Uline offers vendor credit with net 30 terms. That means you can buy things with them. And they do have some office industrial supplies too, but net 30 means that you buy from them, and then you got 30 days to pay the bill. And then you do that. You always want to pay early, because the better you pay early, the higher rating you get on the business credit. So don't, just because they give you 30 days, you don't have to wait 30 days, but it does help manage cash flow and you buying these things. Now, typically you want to buy things that you need. So the idea here is, yes, you're trying to develop business credit, but at the same time, you're buying useful items that you need in the day-to-day function of your business. So I'm not telling you just go out and buy junk just to try to get credit. You want to buy useful things that can help you in your business. Now, the qualification for Uline is you just got to have an active business. And then now keep in mind, your first purchase with them, they might require a prepayment. They may not give you the net 30 terms at first. You may have to purchase the first time, but that's okay. Purchase the first time. Again, buy things that you can use. And then you buy that. And then when you go to make your next purchase, and then you ask for net 30 terms, if they approve you for it, then you're great. But remember, you may not get it the first time. So don't be disheartened if they tell you the first time they won't give you net 30 credit. They want you to do a straight cash transaction. So Uline does report to Dun & Bradstreet and Experian Business. So again, this is business. Experian Business, not Experian Personal. Now, the credit limits for Uline typically start between $500 to $1,000, and there's no personal guarantee needed with Uline. Now, Quill, I'm going to talk about Quill. Many of you guys have heard of Quill, especially if you've looked into business credit before. Quill is a vendor that offers net 30 terms as well for office supplies, business essentials. Okay, their qualification details that you got to be an active business, you got to have an EIN, and your first order, again, may require repayment, just like I said with Uline. But after the second one, if they don't offer you the net 30 the first time, they will definitely, they almost always offer it on the second one. I can't really think of anybody offhand that they were told multiple times that they needed to prepay before getting a net 30 credit term. They also report to Dun & Bradstreet, but they don't report to Experian Business. Their credit limit's usually around $500, again, with no personal guarantees. Granger's another one. I'm sure many of you have heard of them. They offer net 30 terms for industrial and business supplies. Again, my guy, the landscaper, he used to get all his stuff from Home Depot, and he would use his credit card or pay cash. Now he orders things through Granger and through his vendor credit line, and then now he can use that to buy his supplies, his garbage bags, his lawn bags, the leaf bags, and equipment, and gas and oil, and not gas, but oil and spark plugs and things like that for his lawnmower, his gas lawnmowers, his gas weed whackers, and other equipment. And string for his weed whacker, so on and so forth. So Grainger is one that he uses very much. With Grainger, you must have an active business like all the rest of them. No business, no minimum business age or any of that stuff. Grainger does report to Dun & Bradstreet and Experian Business as well. Their credit limits typically start around $500. Again, no personal guarantees. It's all business credit. Now, there's a company out there that has very helpful in developing business credit, and they're called NAV Business. You can set up with them. They're very helpful with credit monitoring and things like that. But the NAV Credit Builder is basically you're paying for monthly monitoring, just like I tell you about the importance of monitoring your credit on the personal side through companies like Smart Credit and MyScore Now. NAV can offer you credit monitoring as well. So what you do with them is you subscribe to them, and then they report monthly to all the major credit bureaus, Dun & Bradstreet, Experian Business, and Equifax Business. Now, NAV Business, to qualify for them, of course, you have to have an EIN, which means you got to have an LLC, and you have to be a valid U.S. business. They don't have any minimum time in business required. You can sign up for them on the first day you form your business. Once you, well, it won't be the first day, because once you form your LLC, you register your LLC, you got to wait for that to be approved. But once you get your EIN, you can sign up and you can subscribe to NAV and get the monthly business credit monitoring, and they will report that as a trade line on your credit. So I've used them. They're great. The beauty of them is they also don't have any personal guarantees required, but they do help you build your credit through these subscription payments. Again, I use them and they helped me to get my score, build my score a year ago, to build my business score very quickly. They were helpful. It wasn't all on them. I had to do the other things too, but they got me off to a strong start right out the gate. Now, Crown Office Supplies, they are here to service established vending credit, and they have minimum requirements as well. Net 30 terms, like many of the others, for office supplies. Of course, you have to have an EIN, minimum business credit, LLC. No minimum time in business is required. Again, you can sign up for them on day one. They report to Equifax and another business entity, credit rating called CreditSafe. They will help you build credit when you make consistent on-time payments with them. Their credit limits start typically around $500, no personal guarantees. So as you can see with a lot of these, it's the same as with personal credit. You got to be responsible. You got to develop a relationship. You got to buy from them, develop a relationship. You got to make on-time payments, and they will report positive pay history just like the personal ones will. And then there's another company that helps with that. It's called Creative Analytics. What they do is they help build your credit through net 30 terms. But what they do is they provide marketing and analytics services for your business. They'll help you market to get more customers, and they'll help you analyze that marketing to get you effective leads. If your business is looking for lead generation, Creative Analytics is a way that you can hire them, get help with your marketing, and at the same time, when you pay the bill with them, they report you on your credit and help with your credit. So it's a win-win. You'll get some professional help with your marketing. I know, right? When you guys start out, you think, I'm going to try to do everything myself. But you do want to spend money on professionals to help you build your business, because it's an investment. Don't look at it as a purchase, as an expense. When you're buying things that help you in your business, you have to look at those as, for tax purposes, we call them expenses, but they are actually investments. When you purchase professional help, professional services, that's an investment in your business. When you buy professional services to teach you new skills in your business, that's an investment. When you when you buy things that help you with your credit, those are investment in your businesses, because credit is a part of your is a important part of your business that you want to develop. It becomes an asset because it can give it can help you make money, but it gives you access to capital that you can use to invest in things to help you grow your business and become more profitable. And so Creative Analytics reports to Equifax, Credit Safe, and Sonar, which is another credit scoring rating model that analyzes business credit. Again, with them, you make consistent payments and you will build credit over time with Creative Analytics. And they generally start out at $500 extension of credit. Again, no personal guarantees. So yeah, a lot of no personal guarantees at tier 1. And personal credit is not really that much of an issue with many of these. Some of them do soft pulls, but many of them don't. At tier 1, they don't look at anything on the personal credit side. All right. So I mentioned to you the NAB Credit Builder, Crown Office Supplies, Creative Analytics, Uline, Quill, and Granger. So write those down. Go there. If you've already started, if your business is already set up, those are good places to start to develop tier 1 credit opportunities. So, and again, before you can go to tier 2, you want to develop a minimum of 3 trade lines that are reporting before you try to advance into tier 2. Because if you try to go too soon, it's not gonna it's gonna be very difficult for you. Now, tier 2 is where we get into retail credit, and then we try to transition to tier 3. So as you're working to expand your business credit, I'm going to tell you about what you want to look for in tier 2. In tier 2, like I said before, when making that transition, you need to have all 3 trade lines reporting from your activities in tier 1, and you got to have a Paydex score of 80 points or higher. The minimum is 80. You need to show 3 to 6 months of on-time payments, and you would have done that through your tier 1 activities. So don't try to rush the process. 3 to 6 months. It takes time. So that first 90 days, you want to make sure you've done the work you needed, so that all your vendors are giving you credit and not just making you make purchases. So, but then after that first 90 days, another 90 days, you want to develop that on-time payment history to get you to an 80 Paydex scores, to get you to higher scores with Experian and Equifax Business, as well as Sonar and the others. And so that's what you need to get to get tier 2. Now, with the credit limits with tier 2 lenders, typically start at $500, but usually grow significantly, especially when you demonstrate, you show that good pay history in pay 1. They might start you with $500, but usually they start out higher than that. Because again, this is retail credit. This is not lines of credit or any of that yet. So these are vendors above and beyond the ones we talked about in tier 1. And here we're talking about Office Depot, Amazon Business, Home Depot, and others who offer higher credit limits than what we see in tier 1. In other words, you've demonstrated you built some credit, so now they can trust us a little bit more. Now, before you can think about tier 3, here's what you want to have completed in tier 2. You want to have completed having a minimum of 6 trade lines now. So we're going to add at least another 3 in tier 2. So we got at least 3 in tier 1. Then we're going to need at least 3 in tier 2 before we can think about advancing in tier number 3. So let's talk about a few of these vendors, and and many of these you've heard of. I mentioned them, but let's talk about them in detail. Amazon Business Line of Credit. So it's a revolving credit for business purchases. Okay, with the Amazon Business Line of Credit, you're going to use it primarily for purchasing goods on Amazon. Now, of course, you must have an EIN, a DUNS number, and a business bank account. But with Amazon Business, now I'm not talking about the Amazon credit card, because there's a business credit card through some of the banks like Amex. This is a business line of credit. So you can buy a lot of other supplies and other things you can buy directly from Amazon through that line of credit. And this is bigger items. So you're getting into like equipment and things like that. And so with Amazon Business Line of Credit, you got to be in business at least 1 year. That's why it's a tier 2 item, because you got to put in the time to develop the credit. And unless your business has been longer when you're starting this process, you'll be fine. But again, they need to see 1 year in business. Now, Amazon Business Line of Credit, they report to Experian Business only. They don't report to Paydex or any of the others, but they do help with the experience. So the idea is, when you're paying attention to the vendors, you want to make sure that you're developing all the lines of credit. So you want to make sure you have vendors that are reporting to multiple lines. So if you got vendors that only report to one, you want to make sure that you have other vendors that are reporting to the others, so you can have as full a credit profile as you can across multiple business scoring models. But they will definitely help you build your business credit. Now, Amazon Business Line of Credits, they usually start at least $1,000. Again, tier 2. So you've developed some credibility, and so now you'll start to see higher limits. And then they will give you increases based on your business performance, how you're spending, and then paying back, and things like that. So again, the idea here is not to build up a high balance. The idea here is to use them, because you're using the credit to manage your cash flow. So now you don't have to wait until every time a customer pays you and take money out the bank. You can have your money, your revenue continue to stream in, and you can make your purchases, your day-to-day purchasing decision using the line of credit. And then you use your revenue to pay that back and try to pay everything monthly, so that you don't have to worry about the ups and downs of your revenue generation to have ups and downs in your spending. So this way you can let your revenue come in, but you can do your spending as needed to purchase your day-to-day, supply your day-to-day needs for your business to run smoothly. Okay, another tier 2 vendor I'm gonna talk about is a company called Shirtsy. Now, what Shirtsy provides is custom printing and apparel. So if you're trying to brand your company and you want to buy T-shirts for branding, or if you have a store and then you want to use them as a vendor to supply shirts, you can give them custom brands or slogans or things like that and have them put on shirts, and they can become a part of your inventory in your virtual store, like Redbubble, Red Spectrum, Shopify, and then Shopify TikTok. That's another one that's become real popular right now. So keep those in mind as well if you're looking to do an online store. Shirtsy is somebody that would be great in that. Now, Shirtsy does offer net 30 terms for custom printing and apparel. Of course, you got to have an active EIN and a legitimate business entity with a valid address. We could talk about that later, but I told you guys, when you're setting up, structure your business, you don't want to be using things like personal addresses, personal phone numbers, personal emails. We need to structure that business properly to get proper funding. Talk about that more in later videos. Now, Shirtsy reports to Experian Business and Equifax Business, but not Paydex. But just keep that in mind. But that's okay. Helping you to build your business credit on those 2 scoring models. Now, Shirtsy they offer credit limits and they vary by your business profile, but they typically start around $500. Again, no personal guarantee required. So that's what you see when you see people saying, we can get you business credit with no personal guarantee. I'm not going to do that to you. I tell you the whole story. That is true, but you got to tell the whole. I like to tell the whole story. So don't go thinking that you can get business credit with no personal guarantees right out the gate on any and all financing you get. There is a strategy to it. Divvy is another one. The Divvy Business Credit Card. Now, this will help you to expand your credit by offering you a corporate credit option or alternative. And corporate credit is slightly different from business credit, okay? Because typically with corporate credit cards, it offers you expense management, and it usually has no ties to the individual. It's typically just the business, only the business, no soft pulls, none of that. And so Divvy is a corporate credit card, but it offers, when you say corporate credit card, that's more like the old Amex, where you could charge whatever, but you had to pay your bill in balance, your balance in full at the end of the month. There was no revolving option, but they do offer off revolving terms, just like Amex over time evolved to revolving credit, where they don't just go with the net 30 on the card. They allow you to carry a balance and have a revolving line of credit. Some of them don't have limits, no spending limits, but they do have that option to go from net 30 type situation to revolving. Divvy is very similar in that. Of course, you must have an EIN and you must be a US-based business. So, but they don't have any minimum time in business. They report to Dun & Bradstreet and the Small Business Financial Exchange, FBFE. That's another one that a lot of people may not be familiar with. But you see that more on the corporate side rather than just business credit. Now, they typically have limits that range from $1,000 to $50,000 based on your revenue and expenses. No personal guarantee is required, but they do they want to see bank statements. They want to see your revenue levels, and then they give you credit according to your revenue levels. But again, it's tier 2, so it's just now starting getting into the nitty gritty. Now, another corporate card is called the Brex card, BREX. It's a revolving credit card strictly for US-based businesses. So it's corporate card, no personal guarantees required. Of course, you got to have an EIN. You have to have a US bank account, and you must be incorporated in the US. But again, no minimum time required in business. Now, Brex corporate card reports to Dun & Bradstreet, Experian, and Equifax, builds your credit profile quickly. And limits range from $50,000 to $100,000. Okay, and then there's companies like Wise Business Plans, and then there's companies called Expanding Credit Access, and series like them. They are expanding access. But again, as a recap, Divvy, Brex, Wise, Amazon Business Line of Credit, Credit Strong, and Shirtsy. Those all can help you to expand your credit access. These are all considered tier 2 mid-level vendors for growing businesses. Now, tier 3, this is when you get into fleet credit and that transition to credit 4. So, in addition to accessing that credit, tier 3 and fleet credit often helps you manage your fleet expenses and expanding credit. Now, these are for my guys who have multiple fleets as part of their business. Folks like people who do car sharing through some of those other places. Let's just had a brain fart right there. But we'll talk about that in a second. But with tier 3, They want to have at least, you want to have at least 6 trade lines, because remember, that's what we needed to get to tier 3. You got to have a paydex score of 80 or higher. And of course, you want to have a strong payment history. Now, with tier 3, you got vendors like Fuel Man, which is a fleet car for gas. You got Home Depot commercial, as well as Shell business fuel cards. So with them, you often have credit limits in the range of $1,000 to $15,000 based on your fleet expenses and pay history. So you got Office Depot business credit, revolving net 30, EIN, 1 year in business. Credit limits range from $2,000 to $10,000. They report to Experian Business to help you boost your credit. You got Dell Technologies, the Dell Business Credit. Of course, obviously Dell, they sell computers and other tech. So they offer you a revolving line of credit to buy tech and equipment of all kinds. Of course, you got to have an active business, 6 months with an established credit profile. They report to Dun & Bradstreet and Equifax with credit lines typically starting at $2,000 plus. Obviously, we know what technology costs, again, with no personal guarantee. SupplyWorks is another one. They give you credit to buy for facility supplies. So, things that help run your facility, your business, your warehouse. They offer net 30. At EIN, you got to have 1 year in business. They report to Dun & Bradstreet, and they'll go as high as $5,000. And then you got Fundbox. That's another business line of credit. It's revolving. And so it's a line of credit. It's not a credit card, but it's a line of credit with no personal guarantees. Of course, you got to have the normal qualifications. But they only require 3 months of business activity to be eligible for them. They report to Experian Business. And of course, like they go from 1,000 to 150,000 based on your business activity. That means what your revenue is, what your and then what your requirements for equipment needs. But it's primarily they look at your revenue. The more you make, the more they'll lend you. Capital on Tap is one you hear about a lot. They're great. It's a business credit card. They offer rewards and flexibilities. Of course, there's no personal guarantee on it. Got to have the usual qualifications, EIN, but only 6 months of business activity. No minimum revenue is required, but they do require a business checking account. They report to Experian Equifax Business, and their credit limits run from $2,000 to $50,000, depending on your business activity. In other words, your revenue. And then there's one called the Creative CEO, or CEO Creative, I'm sorry. It's a net 30 account. And what they do is they offer net 30 for creative and business supplies. The usual qualifications. They report to Credit Safe, Equifax, and NACM, which is another business scoring model. You'll find that there's many out there. It'll help you build your credit because they report all your consistent payments on the services and products that they provide. Their credit limits range from $1,000 to $5,000, depending on your credit profile. Again, no personal guarantee. And then, just to recap that, these are all considered Tier 3 advanced credit options: Fundbox, Capital on Tap, CEO Creative, Office Depot Business Credit, Dell Business Credit, and SupplyWorks. So check those out. But remember, these are Tier 3 just for future reference. And so in order to get to the top tier, you need 9 trade lines. So if you picked up at least 3 trade lines from each of the 3 first, second, and third tiers, you'll have the minimum. But many of these you should be able to pick up. But of course, the idea is you want to use the vendors that you can take advantage that'll help you in your business. So you need to get to Tier 4, the top tier, 9 trade lines that you should have before you should try try applying for anyone in tier 4. So tier 4, this is cash credit and high limit credit options. So to unlock your business loans and cash credit, you need to be eligible for tier 4, starting with those 9 trades and all the good history. And then, of course, you got to have at least an 80 paydex score for them and strong payment history on all the vendors in tiers 1, 2, and 3. Now, vendors to consider in tier 4 are Bluevine Business Line of Credit, a company called Tilful Business Credit, and NAV Business Boost loans, because you can borrow money. And again, you're borrowing money and then you're using this credit in your business activity, and at the same time, they're reporting positive building history to help boost your credit, your business credit even more. So these are all high limit companies. So typically the loans range from $5,000 to $250,000. So that's a large bag, and of course that depends on your credit history and your revenue streams. Now, to move forward, once you've hit tier 4, understanding that the vendors here or the bankers here or the creditors here have, they will give you access to the most flexible finance options. And again, all with no personal guarantees. So Bluevine's Business Line of Credit, just to hit the highlights, you got to have that. But again, you got to have, there's no personal guarantee required. You got to be a business at least 6 months. Of course, you got to have an EIN and all that. And you have to have at least 120,000 in annual revenue. So again, these are where the big boys play at. But I'm just letting you know how high, it goes. Of course, they report to Experian, Dun & Bradstreet. And again, as I told you before, $5K to $250K is what you can expect to get once you get to tier 4. But this is what we're working for. I'm not at tier 4 yet, but I'm on my way. So, Tilful Business Credit Card, where you get corporate credit cards for telecom services and things like that. Their credit limits range from $1,000 to $10,000. They report to the usual ones, but again, they're for telecom services because, of course, in business we need telecommunications. We're not just using Spectrum, even though Spectrum just has business, but we have other options. NAV Boost Loan, again, it's a flexible business loan. This is a loan, not a line of credit. This is an actual loan where you get a check or a wire. And again, it's based on your credit profile and your credit performance. Now, they typically require a personal guarantee. However, with NAV Boost, they will waive the personal guarantee contingency if your business credit is strong enough. And if you're at tier 4, it's most likely strong enough to get that waive. You just got to remember to ask for it. They only require, obviously they require EIN, but they require 3 months bank statements, and you got to be a U.S.-based business because they do a revenue review to make sure you're getting hitting that revenue number to qualify you for that. They report to all the major credit bureaus. That's the beauty of NAV, because NAV at all levels is instrumental for businesses. And then, of course, the loan size varies with your business performance, credit history, and revenue levels. You got BP Business Solution, which is a gas card. Fuel card, which is revolving. It's all the usual points. You got to have it, but they require 2 years in business. And then credit limits range from 5 to 20. Now, you say, again, if you're managing a fleet, these fleet cards make sense. I know a lot of folks, they get fuel cards even when they're not managing a fleet. They just like the idea of having their personal fuel costs within their business expenses. It's nothing wrong with that, but just remember the main goal here is to manage the fleet. But if you can get perks and rewards by using fleet management, I don't want to say it's personal. It's not really personal, because I'm assuming when you're driving around and you're conducting business, these are all business expenses anyway. It's just another way to have everything, going through your business and not on the personal side. Perfectly good way. Of course, you want to consult with your tax person. Lowe's business credit, as you can imagine, is revolving. You got to have at least 9 trade lines. And strong business credit. So don't think you can just run out and get a Lowe's card, business card in your business name. You got to qualify for it. But these credit limits go as high up to $20,000, depending on your credit profile. But again, with strong credit, no personal guarantee. You got the Shell fleet card, as you can imagine, same. You got to be between 1 and 2 years, at least, in business. With the Shell fleet card, they report to the major bureaus. Credit limits from $5,000 to $20,000 with no personal guarantees. Good business credit. So, Bluevine, Tilful Business, NAV Business, and BP Solutions, Lowe's Business and Credit, Shell fleet card, all tier 4 that you want to get. Because before I learned all of this, I made the mistake and I applied for several fleet cards, which were at tier 4, and I was really only on tier 2, and I got denied on all of them. It didn't hurt my personal credit or anything like that, but it was just kind of like, oh wow, before I knew better, I was like, oh, why am I did so well the first time around. I didn't know about the tiers. I just knew that I needed to start out with certain ones. I did, and then I didn't know which ones I should have done next. And I went out of order, out of sequence, and I got stuck and I got into a roadblock where I couldn't get anything because I was applying for things that I wasn't at the right level yet. I wasn't ready for. And so I got that. Once I learned about this in the order that I just told you guys, then I started developing that more credit and getting the approvals because I was built up. That's why I said I'm not at 4 yet. And some of the items, tier 4 items I just listed to you, I had applied for when I was really only at tier 2. And of course, they all turned me down because I had the credit. Some of them I had the credit, but not stellar. Yet I didn't have enough trade lines was the big one because I hadn't developed. I only had 4 trade lines at level 2. And of course, they were needing 9 at level 4, and these were level 4 lenders, but I didn't know while I was getting turned down. But once I learned this strategy and I realized, oh, I see perfectly why. So now those denials become learning experiences and so on and so forth. So that's just a little bit about business credit and how it works. This is just an overview just to tell you guys. So if any of you out there trying to do it, at least you'll know it's the right way. Now, if you want to know more about this and you need help, I can certainly help you. Reach out to me through the normal contacts here, and you can reach out and I can help you set up a plan to get you on the right track to getting your business credit together and work with your personal credit at the same time. And I can even show you how to fix your personal credit for free while you're building up your business credit. And then help you take your business to the next level so you can get that funding, so you can start putting the right tools and get the right things in play to expand, to grow your business. Because a lot of people talk about scaling the business, but you got to be positioned to scale it. You got to have your business set up so that when you grow and you put your money to work growing it, you'll have the capacity to handle all the new business that's coming your way when you set yourself up right. So again, that's this week's Credit Conversations. If you guys have any questions, feel free to reach out. Feel free to comment below. And I'd ask that you please, after reviewing this, because it will be available on YouTube, once you view this on YouTube, please like and please subscribe to my YouTube channel if you haven't already. Please like my videos. If you find value with this, please like it. Please share it with anybody that you think can benefit from the information here. And then if you want more information about the free credit repair, you can reach out to me directly. You can go to my website, creditrenovatorslllc.net. or you can click on any of the links below, which will take you to me, and you can reach out, and you can even set up an appointment if you want to have a free credit audit and a free business audit. Not free, but included business audit. Doesn't cost you anything but your time. So it's not really free. But I'd be more than happy to help you out with that, and let's get together, see what I can do for you. So until next week, this webinar is now on Sundays at 7. So until next week, you guys take care, and hope to see you out there in the business world. Take care.